Angeline Ong, and welcome to your look ahead to Wednesday, the 21st of February. Now, we start off with Japan because of the trade balance that's due out there. But the main thing to look out for early in the session will be public sector net borrowing numbers out of the UK. Now, this could provide more clues as to the state of the UK's coffers ahead of what is going to be quite an interesting year, given there is an election, oncoming election rather. Let's just have a look at the sterling versus the dollar cross. So we've been trading pretty much in this channel for some time, the sideways channel if you like, and it's between 12,524 and 12,832. Now, what is interesting about this one-day chart is that if you look at the 50-day moving average and the 100-day moving average and the 200-day moving average, well, the 200 and 100 are starting to converge there. And that's always a key signal of a trend change. However, we're still seeing this cross tick slightly higher towards that green line there, which is the 50-day moving average. What's key as well is to figure out what is happening on the US side of this cross, the US dollar, because everyone's dialing back or talking about a dialing back of the interest rate cut timing. Certainly on the UK side, Bank of England Governor Andrew Bailey has said that he's comfortable with investors betting on interest rate cuts this year from the Bank of England. Whilst he pointed out that Britain's economy was picking up after falling into recession in the latter part of last year. Investors have been adding bets on a first Bank of England rate cut in June. However, it's likely that if the US dials back, then the UK might follow suit as well. The Bank of England raised the bank rate to 5.25%, its highest since 2008 in August 2023. And as you can see there, you see that cross with the pound rising there, but it has fallen since, hitting a low in early October before bouncing back. And right now, as I mentioned earlier, in the sideways trend channel between 12,524 and 12,832. Meanwhile, in the Eurozone, we've got February consumer confidence numbers. These are the flash numbers. And as I mentioned earlier, the FOMC minutes will be key in the coming session, along with API crude oil inventories. But it's really the FOMC minutes that will be interesting, because investors will be going through them with a fine-tooth comb to figure out the timing of when the first Fed rate cut might come. Just showing you the US dollar basket there, because this gives you a clearer idea of what I mean. We have this long climb here, as you can see, which started escalating towards sort of the back half of last year before plateauing around the September to October mark. And what's also been happening is it fell right down to this point around 28th of December, and suddenly there was that Fed pivot, if you remember, and this talk of Fed rate, the first Fed rate cut rather. But since then, those expectations have been clipped, especially given recent data from the US have shown surprising resilience in the US economy. In terms of earnings from the UK, we've got HSBC out with full year numbers, Rio Tinto and BAE Systems as well reporting. But the big one, the elephant in the room that markets have been waiting on for some time now, comes out of the US. This is the earnings report from Nvidia, the chipmaker at the center of the frenzy around AI. Now, what is key here is because expectations are so high, if we get any sort of negative comment, anything that will deflate that AI rise, some call it a bubble, certainly it has been a frenzy, then we could see quite a move on the market. Nvidia, if you remember, its stock pretty much tripled in 2023, and after it raced past Amazon and Alphabet as well in market cap, it's gone from strength to strength this year. also continuing its rise. If I show you this chart here, which is a daily chart. So if I draw that green line from January to there, you can see the climb that it's had in this year alone. Analysts warn, though, that with these gains comes a high bar for its results, for which a tripling in Q4 revenues is tipped. Any disappointment, as I mentioned earlier, is likely to be taken very badly by investors. And that's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. And IG's Angela Barnes will be on at 7:30 on early morning call ahead of the European market open. Follow me on Twitter at Angeline Ong or at IGCom. This is IGTV.